My next guest has been knocking the cover off the ball, and she remains optimistic, citing, in fact, this AI, CapEx, and industrial spending, and infrastructure build out, all of these things. These are multi-year growth opportunities ahead. I want to bring in now Barbara Doran, and from the CIO rather at BDB8 Capital Partners. I think I had an extra D in there, BD8 Capital Partners, my bad. Let's talk for a moment about this rally, because some people would argue it's a one-trick pony. In other words, it's mostly AI or these top 10 stocks, which are 41% in the market, but they're also 36% of profit. So it's a one-trick pony, but it's a hell of a trick.
Yeah, it certainly is. I mean, if you look at it's been 10 names that have contributed 70% of the upside earnings surprises and the revisions, but these are names that are going to keep going. This AI, and this is what the problem with what's NVIDIA last year, is it just going to be over in 6 months, 12 months?
Right.
But it's not. I think people are understanding this is a multi-year process with many legs and many secondary and tertiary effects.
Do you think it's just human nature to believe, okay, that it just can't keep going? It can't be this good for this long. Is it just sort of human nature? Or is there enough evidence in the history of investing that says, hey, these things, it's compared to different bubbles. It's going to pop at some point. And when it does, it's going to be ugly.
Yeah, well, I think it does happen eventually, and I think that's always the question, when does it happen? But if you look at past periods of investment in technology, the internet, these things can stretch out for years, and I think that's what we're seeing right now. So I think you've got to stay aboard, go for the ride, but you've got to trim back, which I just did in recent weeks, some of my biggest winners.
Yeah, I want to ask you about that. So we just got all these filings from these hedge funds. This put together by App Economy Insights. I love this table, right? So this is a March, some of your biggest hedge funds, their top positions, and you can see a ton of semiconductor names in there. Then you've got Google in there and others. And I was going to ask, because Google, you had at least a triple-digit win from the last time you mentioned it here. Are you taking some profits in these names?
I am. I mean, Alphabet has been a core holding for a long time for all my accounts, as has Amazon, as has Apple, NVIDIA, Broadcom. But I have started trimming a lot in the last few weeks because they've gotten up to way overweighted. So they're still overweighted, but I've taken 2 to 4% off the positions.
The only area that you've been weak in, everyone's been weak in, anything that's apparently could be, AI. AI is hurting it, hitting it. Have you done anything on that end of the equation to close anything out, or are you just riding this thing out?
In the software? Yeah. I've owned Salesforce and ServiceNow. Salesforce, when all the uncertainty started, I did sell everything, just out of, and it has gone down a lot. ServiceNow I haven't sold, and I've had to ride this thing down. And I think now you've seen it up about 17% in the last, week.
It's acting really great. I mean, it's hard to see with this chart, but to your point, it's made a big move off the bottom. By the way, President Trump's loading up. We learned his positions last week. He bought a ton between January and the end of March. But again, an upgrade yesterday. It feels like maybe for some of these names, the worst could be over in the sense that people are looking at them more individually.
Yeah, well, I think that's exactly the case, because you know how the market can be. You throw out everything because you don't know. Right. And the fact is, how would their business models be disintermediated? Now, they just had their investor day 2 weeks ago, and that's where they talked about integrating AI. And what they do is a lot of mission critical enterprise stuff, whether it's IT, human resources that they need. The only thing, the risk here is that there'll be fewer seats needed, but still, their model, 97% revenue from subscriptions.
You like American Express, which leads me to believe, okay, that's the upper part of the K. Yeah. Although the stock has been in a downtrend, which I don't understand, but maybe this is why it's an opportunity here.
I think it is, actually, because American Express of the Visa and MasterCard is down. It's down 15% year to date. Visa is up 4%, MasterCard off about 11%. And I think the main reason is that they're the only one, they get about 25% of their revenues from loans, and so there's uncertainty, the macro, but you're seeing this in the reports of airlines and hotels and travel. People are still spending.
That's exactly.
And that's their key, is the higher end market.
Yeah. No, so also gold. Now, of course, gold had that amazing run most of last year. It's pulled back and it feels like it's settled down. It looks like it's looking for the spark, the next leg higher. Yeah,
I think so. And I think, it's had a big pullback. I mean, it's off, almost 20% from its highs. And I think part of it was profit taking, but it also, I think, with the Iranian war, people needed to get, to spend, for supplies for that. So I think you saw a lot of gold selling.
Central banks and things like that have been a big seller?
Yeah, I think so. But I think there's a longer term, trend with central banks after Russia's reserves were impounded and central banks realized, hey, owning the dollar can be weaponized.
Right.
And I think given geopolitical realities, people have been moving away from the dollar, and that's a trend that I think will continue.
Before I let you go, we've got to acknowledge what's happening here with these yields and with the inflation and things like that. It feels like since we got over 4.5 on Friday, this market's been under a little bit of pressure. We're at 4.6 now, and the 10-year to 30 years through the roof. How concerned are you about these, these yields and the inflation risk?
Yeah, well, I think we do have to keep an eye on it because you look at inflation right now is going up, probably mostly because of the energy issues associated with the strait being closed. But you've got the PPI came in at 6%. Very unexpected. It was supposed to be like 4.5, and the CPI for April could come at 4%. But I think those are probably short term because you're going to have offsetting productivity improvements. But we'll see. Right now you've got a lot of spending from refunds. Savings rate is going down.
But you're still overall bullish on the market, the stock market.
I think you have to be. When you saw earnings come in double what was expected, that's extraordinary.
Yeah.
And revenues up dramatically too. And forward guidance very positive as well.
Yeah. Well, you've been knocking the cover off the ball.